Hey guys, welcome to Money Matters once again. Today I will be showing you a very simple trading strategy which is very easy to implement. To understand this technique, I will again use the concepts of higher time frame and the lower time frame. If you are unaware of these concepts, kindly revisit my videos to know them. I will also place the link to the corresponding videos in the description. Now this technique is based on Dr. Alexander Elder's book called Step by Step Trading. He is a Russian American professional trader and teaches trading as well. And he has authored multiple trading books, and step by step trading is one of them. The technique I will use today is called value zone trading. Let me take an example and talk about the strategy. Now, all of us use EMAs, right? So, EMAs are in fact they're showing the moving average prices of a stock or commodity for the last n number of days or weeks. Personally, I use the EMA setting of 10, 20, 50, 100 and 200 EMAs. Again, the EMA settings are a personal preference, but I guess most traders or investors use the 100 and 200 EMAs. Now the strategy is to buy or sell a stock or a commodity when it is valued beyond its current average price. So for example, if in a chart the 50 and 100 EMA is pointing up and the prices are trading near about the 50 or 100 EMA in the higher time frame, so I will definitely look for a signal in the trading time frame or the lower time frame which gives me a buy signal for buying. Okay, personally I use a combination of the MACD and the stochastic in the trading time frame to give me an appropriate signal, and it has been back tested and works pretty well, but I assume the indicators that you use also are properly back tested. So you can use what you are comfortable with. Now let's take a few examples. I have opened up iCharts in two windows so that I can show you the two time frames at the same time. You are looking at the weekly chart of TCS on the left and the corresponding daily chart on the right. I have also marked out the points alphabetically to easily understand which entry I am talking about. So at point A on the weekly chart, the prices were trading around 20-week EMA, right? So if you look at the daily charts at point A, you could enter into a position when both the MACD and the stochastic has a crossover, and you could have made a profit of more than 100 points. The case is similar for points B, C and D as well. So you could have entered at each of the MACD and the stochastic crossover, and maybe this point B and C is not as profitable as the point A, but you can still get a fair bit of money on that. Now if you look at point D again, now it has been pretty profitable. So at point D it has been trading at around 935, which was around the 100 period EMA, 100 week EMA rather. And in the daily charts, if you could have entered at this position, this is the one, you could have easily gained around 100 points. That's a lot of money. Okay, now before applying this strategy, you have to be careful of a few things. Examples, what I'm giving you are long signals, right? So if you have to be successful in this strategy, the primary criteria for picking up the stocks is like you have to check whether all the EMAs are pointing up or not. Okay, so in TCS, for example, in this time frame, all the three EMAs were pointing up. So if you take at point D, the 100 was pointing up. If you look at point C, the 50 period EMA was moving up, and at point A and B, the 20 period EMA was moving up. Okay, so you have to be careful of these things. You can make a watch list of around 20 or 30 stocks that you want to monitor on a weekly or daily or whatever, and be sure that all these EMAs are pointing up. Okay, you don't want to be buying at point A if the EMA is down, and even if it gives a long signal in the trading time frame, I don't think you will get much of a profit, or you can make a loss even. Okay, now the point of the strategy is very simple. So just buy the stocks which are trading at a fair value and are not overvalued. Now, like all other strategies, this strategy will not have a 100% success rate, but if you are good with your money management, the risk can be substantially lower. Let's take some trades where you can short the stock. Okay guys, so this is the another setup for TCS, and this was way back in 2008 when it was going in a downtrend. So again, so if you see in the higher time frame chart, that is a weekly chart, at point A and B there are a couple of, or there are 3 points that I can say that it has touched the EMA lines. And if you see in the daily charts, there are crossovers which give an indication of a short signal. So if you look at my cursor, it's over here on 24th of April, on June 9th, and thereafter on August 22nd, September 15th. So there are multiple occasions where your daily charts are giving you a short signal, and if you proceed with those short positions, you will make a good profit. Now with this pattern, I want to mention one thing which might result in losses or minimal profit. Like in the left hand side, there are certain positions where you will get a conflicting trend. What I mean to say is, suppose in this example which is in focus in front of you, the 20 period EMA at this point is going down, whereas the 50 and the 100 period EMA are flat to mildly positive. So whenever the prices are moving in a range defined by the CMAs, from what I have seen, the chances of making a profit, or even there are chances of making a loss. So you might get stopped out in your positions. So it's better there to avoid such positions where the prices are trading within the EMA lines and you are getting a conflicting trend. And it's better in that case to just wait when all the EMA lines are in sync. And what I mean to say is the prices are following in a trend. So if you see over here, your 20 period is below your 50 period, and 50 period is below your 100 periods. Okay, so it's a well defined downtrend. And if you move back over here, now this place is a well defined uptrend. Okay, so whenever this type of setups are present in front of you, it's safer to enter into positions and maintain your positions with your trail stop loss instead of setting a target for it. Okay, so let us take a few more examples to validate the strategy. Okay guys, so this is one more example that I want to present in front of you, and this chart is of Bank Nifty. So a lot of you might be familiar with it, and this is way back in 2009 2010. So let me give you a few more examples of what I wanted to say to you. So as you can see, this is a clear uptrend, right? So at each of these positions where the price have moved back after a rally to the EMA lines, okay, I have drawn the 10 period EMA as well for reference. So at point this one, this, and maybe this, and then consequently this also, at each of these positions you will see there has been a reaction in the daily charts. Okay, so if you see from this position, the stochastic bar is in oversold positions. Okay, this one again, it has been oversold. This is the same pattern repeats everywhere, So this is an oversold position again, as is this, and consequently this one also. So one point that I want to bring to your notice is, I told you that you have to use the MACD and stochastic crossover, but sometimes I think you can use just the stochastic crossover as well, since the thing is like all the EMAs are already in your favor. Okay, so all the major factors are already in your favor. So I just want a signal which will say just enter into position. So it can either be your MACD histogram, which might start to slope up, or preferably the stochastic if it's an oversold position is better. Okay, but the major point is that whenever the price touches your higher time frame EMA lines, in the lower time frame you will always see a reaction from that. So you can either use your daily charts or even your intraday charts to see a signal to buy, and you can buy into that one. Okay,
and sometimes you may use the MACD and stochastic crossovers in combination, or if everything is in your favor already, you might just use the stochastic crossover. It all depends upon your personal preferences and how you have backtested and what are the indicators you are comfortable with. Sometimes some people just use the stochastic crossover by itself. They just go long whenever the stochastic is oversold and go short when it's overbought. So guys, you see that this technique is very simple to implement and uses the core definition of an exponential moving average and fair value to guide you to make a buy or sell decision. I hope you have understood the core principle of this technique, and if you have any doubts regarding this video, feel free to comment. I'll be happy to help you. And if you want more examples on how I execute my trades based on this strategy, I will post a separate video. Just let me know. I request you to please share this video if you like it, and stay subscribed for more money matters. Thank you.